Hello, day traders. You're watching the daily market review with me, financial analyst of Grand Capital Company, Sergey Ilya. And our day heading is dedicated to the technical analysis of forex majors. And let's start our review from the first pair. Will be analysis of euro and US dollar. So, the powerful 4-week euro uptrend remains strong while Thursday's bullish outside day low at 1.3215 holds. The recently completed bull flag pattern created upside scope for 1.3403, which would become achievable on a push above Thursday's 8-week high at 1.3328. 22, pardon. 33.22. A setback below 1.3215 would defer the uptrend extension, exposing the 1.3198 and 1.3165. However, projected support at 1.3110 limits the scope for corrective downside risk. The weekly chart of euro and US dollar trend is bullish. Intraday analysis of US dollar versus Japan's yen. Resistance at 77.75 is under threat. Following Thursday's sharp gains and the 76.4% Fibonacci retracement level of the 78.28 and 76.02, decline lies at 77.75, which is the last line of defense protecting the January 25 reactions high at 78.28. US dollar bulls will look to limit weakness to 77.43, protecting 77.24. Weekly chart of US dollar versus Japanese yen trend is range. Intraday analysis of Great Britain pound versus US dollar. The week's low at 1.5730 is under threat. As the setback from Wednesday's 1.5927 high gathers pace, and Friday session pro below 1.5792 has left the 1.5730 low vulnerable, and concerted Great Britain pounds bear pressure would look to force a break lower towards 1.5643. Support at 1.56 is pivotal for the short term, and we can see that the recovery above Thursday's 1.5884 lower high is required to reopen the 1.5927 peak. Weekly chart of Great Britain pound versus US dollar trend is bullish. Intraday analysis of US dollar versus Swiss franc. The recovery of Tuesday's low at 0.9088 is looking to force a break above resistance at 0.9143. A successful break would leave the 0.9088 low as a significant US dollar bear trap low and prompt for the gains towards the 0.9180 resistance area. However, only a sustained push above 0.9180 would change the course of the broader US dollar downtrend. A setback below 0.9099 is required to re-expose the 0.9088 low, as weekly chart of US dollar versus Swiss franc trend is bearish. Next pair, and the last pair for today, will be intraday analysis of Australian dollar versus US dollar. So, what do we have here? We can say that projected support at 1.0680 will look to limit the bear wave from the week's 1.0847 reaction high. Keeping 1.068 intact would maintain the solid wave structure of the broader uptrend and promotes a rapid return to the 1.0847 peak. The upside threat to the resistance cluster straddling to 1.10 is still valid. Only a sustained break below backup support at 1.0650 would create additional downside risk to the 1.0527 and 64. Higher lows. Weekly chart of that pair, Australian dollar versus US dollar trend, is bullish. Yes, traders, that's all for today. Um, I wish you the good luck and, of course, to spread the beautiful weekends. It was me, financial analyst of Grand Capital Company, Sergey Lin, and of course, don't forget to visit our website www.grandcapital.net. Thank you for attention. I wish you the fair trends and good luck.